Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for WealthPress. It's Friday. It's February 17th. We only have 11 more days to go till this month is over, and we have a holiday weekend. It's been a crazy month, and I mean a really, really crazy month. Now, this morning, NASDAQ is down 89 points. The Dow's down 100 points. Boy, oh boy, we went and took a dive yesterday. Now, I hate to say I told you so. But how many times did I tell you that this rally is not going to sustain itself? And how many times did I tell you to watch out for these algos that are getting crazy? Now, today is the most perfect example to show you what I mean. And I mean perfect, so you pay attention. Remember a few days ago, I was looking at the SPY. And I was showing you the SPY. And I was showing the relationship between the SPY. And I was saying how, look at this channel. It looks like a channel, and it's going to stay within the channel, especially since the Dow Jones has absolutely no intent of breaking up to the upside. I mean, look at this. Nothing, right? Nothing. So I was explaining how the QQQ has the most speculative stocks, right? It has the most volatile stocks. And these are the stocks the algos are hitting really, really hard. And I was telling anybody and everybody, and if you don't believe me, go to my video from yesterday or go to my video from 2 days ago. And I was showing this pattern. I said, you see this right here? This is going to trigger a lot of buy stops into the market. A lot of traders and investors have buy stops because they think this flag is going to break up to the upside. A lot of people got tricked and hosed. And that's what I'm talking about. Exactly the same thing happened right here. Look. See that? Looks like we're going to have a nice juicy breakout, nice flat top. Everything looks kosher. Everything looks copacetic. And next thing you know, it makes a little high. It triggers the buy stops. And then it takes us down. More and more and more of that I've been seeing over the years. More and more. You see that right here? Back in the old days, it would have gone a lot more like the SPY. But these algos, they distort the markets just a little bit beyond. They know, they see the stops that are right here on the NASDAQ stocks. They trigger them. They cause a whole bunch of buyers to think the market's going to go higher, and then they take you down. This is exactly as I told you, and I'm telling you right now, if you don't believe me, go to my video from yesterday. Go to my video from 2 days ago. I'm using the exact same example as I'm using right now. So a few things I wanted to bring up to your attention. First of all, let's talk about global economy a little bit, and then we'll get into the earnings and all the other good stuff. And this is something you really need to pay attention to. So shares slipped in Europe, Asia on Friday. Benchmark on Wall Street had the biggest drop in 4 weeks as investors registered disappointment over an inflation reading that came in hotter than expected. Oil prices, U.S. futures, also declined and fell 1.4% Thursday, following news that the inflation at the wholesale level slowed by less than the economists had forecast. Wow, what a surprise. No one saw that one coming. You know, the Fed has been telling us that we're going to have to be patient. It's going to take longer. It's going to be a rough ride, but people just don't want to hear it. Echoed a report on prices on the consumer level from earlier this week that suggested inflation isn't cooling as quickly as smooth as hoped. And again, we talked about this. We talked about this in detail. Thursday's inflation report showed that prices at the wholesale level were 6% higher last month than a year earlier. Slower than December's rate, but worse than expected. Perhaps more concerning, and this is concerning, was the fact that inflation accelerated in January on a month-to-month basis, even after stripping out prices for food, energy, and other layers. That means we are still in a bad situation. Matter of fact, Loretta Mester, president of the Federal Reserve of Cleveland, said she saw a compelling economic case at the Fed's meeting earlier this month to raise rates by double what it did, back to 0.50. We're not getting out of this that easily, folks. It's just not going to happen. So if you look at the broad market or the NASDAQ, the most obvious scenario to me, and maybe I'm crazy, maybe I'm nuts, is we're going to go back to the 200-day moving average. Just like I said right here, this breakout right here, I said we're going to cool off. And just like I said right here on the QQQ, right there. I told everybody who would listen to me, literally thousands of people, I said, don't fall for it. This is the banana in the tailpipe right there. So with that said, notice we've got plenty of heads up that this was going to happen. Let me show you. Bond market, it's going down. It's been going down since the 2nd of this month. It's been going down for 2 weeks. You don't think tech stocks are going to be hurting as a result? That's number one. Number two, I want to show you something interesting. You see ARK Fund? This is Kathy Wood's ARK Fund. This is the fund that peaked out and gave us the all-time high a year before the market peaked and started going down. So this should give us upside first. So I want to see if people are buying calls or puts in the further months. And let me tell you, the implied volatility on puts in the further months is about 2 to 3 times what it is on calls right now. So we're not getting that implied volatility smile that a lot of traders want. It's going straight down. Okay, so investors and traders are not looking at this opportunity to take advantage of this to the upside. They're looking to cover their shorts and to sell small cap stocks. So that's a very, very, very big important. Now, $40 billion went into the market last month in January by funds. I was reading a list of all of the assets that they put their money into. None of them are U.S. equity markets, bonds, European markets, emerging markets, corporate bonds, not U.S. And there was a couple of, I think there might have been one like 2.5 or 3 billion put into a dividend, like a Dow Jones kind of a thing. But that's it. Nobody, hedge funds are not, institutional traders are not hot on stocks. The rallies you see are short coverings, and I'm looking at 3, 4, 5 different things, and they're all pointing to the same thing, even though they're unrelated. So in my opinion, in my humble opinion, oops, let me go back. I'm getting overzealous here. In my humble opinion, I think the Dow Jones is going to break down and come back to the 50-day line. I don't see a major rally. I don't see any catalyst for a major rally, and I think the market is going to pull us back down up to about the 330, maybe the 329 level, and then we'll have to see. But I don't see this level of support really being broken for now. But I think we're going to head there, and that's right at the 200-day moving average. Now, I also showed you something very important when we looked at momentum studies the other day. Remember, I said that the S&P is not going to be all green, and a lot of the defensive stocks are going to go up, and the non-defensive stocks are going to go down. Well, look at communication services. Let me show you this. It's coming down. It's coming down. Look at what happens every time it comes up here. It's hard for a market to rally. That's why I was so skeptical when I saw that breakout out of the QQQ. I was like, this doesn't look real. So going down. Now look at this. Look at Infotech. Hit that thing, turning right around. And even if it goes higher, how much higher can it go than these levels? It's a big, 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 big problem. And then you've got Infotech as well. See that? But now look at this. Look at what happens when you're looking at utilities. Utilities look like they don't have much more to go. They look like they're bottoming out. And look at consumer staples. They look like they're turning right around. So I think what's going to happen is we're going to see a deflation in the tech sector, the communication sector, and we're going to see more upside in the utilities, consumer staples, things that people need versus want. I think that's going to be a real big thing. Now let's look at all the 11 sectors and see how they're looking. I'm sure they're looking a little different today than they did yesterday. Communication services still leading. Technology second, and consumer discretionary is here. Now, I've told people many times, if you ever see technology and communicate and consumer discretionary apart from each other, the market is usually overbought, needs to cool off. It's too fragmented right now. Though, I got to say that other things are not looking as bad, but these sectors need to cool off, and the only way they're going to do it is if the market cools off. So, communication services, I think they're going to break this level right here. As a matter of fact, let's look at it, XLC. Let me give you some levels to pay attention to. Important levels, like really important levels. Let's see, right here. Now, if we break this level right here, if we break 54, let's say 54.50, we're going to hit the 200-day line. And if we hit the 200-day line, let me just remove these nasty studies here. And if we, so I think we're going to break this right here. We're going to go a little lower, and then we're going to hit the 200-day, and then we're going to fall right back into this level, as I expected. XLY, almost there. See, almost there. think it's going to go right back to the 200-day moving average. So if you look at a lot of these sectors, they look like they're not doing all that great. Even financial starting to bend a little bit. So we got to be very, 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 very careful right now. That doesn't look like there's a major rally in anything right now. The only thing I got to say is consumer staples looks like it's getting a little choppier, and usually these choppy periods, they're going to lead to upper breakouts. So there may be some opportunities in consumer staples right now, and there may be some opportunities in utilities right now. But I would be very, very, very cautious with all the other sectors, especially right now. The industrial looks pretty good. Looks like it can stay up here, and consumer staples looks okay. Everything else could go really, really bad, really, really fast, really, really fast. So you got to be very, very, very careful right now. Now, I want to show you guys something else that you need to pay attention to. The market right now. Let me give you this. Volatility starting to come up. The threshold level here is 22. Keep your eye on VIX, and if you see it go above 22, that means the odds are we're going to start going towards the 200-day moving average. There's not a lot of data right now, and earnings for the week are pretty much done. Pretty much done. You've got Deere, you've got CNP, you've got Barnes, you've got AutoNation, but honestly, you don't have a lot of it today. We're now about 400 done, and here's the problem. I'm going to write this down for you. So I want you guys to understand what the problem is. Mid-December, estimates were negative 2.9. That's in mid-December. Yesterday, estimates were at negative 8.3. Between mid-December and yesterday, that's 2 months. We went from an expectation for this quarter to be down 2.9%. We are now at 8.3%. And this is based on what already came out and another 75, 80 stocks that are going to come out next week. But my point here is, this is already not almost 3 times. It's almost 3 times worse than expected. So I would find it very, very difficult based on the following factors to believe that the market's going higher. Many, many more people are buying puts in ARK. ARK is the ultimate small cap fund than calls, number one. Earnings revisions are almost 3 times worse than they were 2 months ago. That's number 2. Number 3, and this is really important, volatility on assets is going down, not up. Usually that's a sign that markets are cooling off and you have a fragmented sector. And to add more insult to injury, when I looked at $40 billion where it went in January, most of it did not go into bullish U.S. equities. They went into defensive, and more defensive. So we got to be really, 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 really careful right now in this kind of market. And again, I warned you about these algos, and you got to be very careful with breakouts these days because these breakouts are happening all the time, and they're causing folks like you to think that the market's getting bullish. It happened right here. I remember I got so many phone calls. Roger, you don't know what you're talking about. The market's going up. It's breaking out. Maybe the market's not going down. And then boom. And the same thing happened right here. Roger, this market's ready to break out higher. Elliott wave, this, blah, blah, blah. No. It's a false alarm. So be very, 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 very cautious right now because there's no major catalyst for the market to go higher. And meanwhile, you've got Fed saying we may have to go back to raising rates 0.5 basis point instead of 1/4. So things are not the way they appear right now. And don't fall for the banana in the tailpipe or smoke and mirrors because and again, my job is not to make you feel worse about the market or better, but I'm being honest and I'm being straightforward, and I'm only pointing what I'm seeing. So take that into account. Now, hot inflation data, better than expected jobless claims, earnings reports, fears of continued rate hikes. It's been a crazy week in the market, folks. That's why I held a very special emergency briefing to cover market reaction, and I shared my number one way to capitalize on this madness, on this monkey business. And I revealed my top 3 high alpha stocks. Click the link to watch this presentation. You do not want to miss out. It's very, very, very cool, and you don't want to miss out. Follow the link, and I'll see you later. Now, remember something. Post comments in the YouTube channel. I'll respond. People benefit from them. Subscribe to our Telegram channel. I gave a bonus trade yesterday. And I'll talk to you guys later. Have a great day. Bye.